Joining us now to discuss BTC price and more is Don Kaufman. He's a co-founder of trading educator TheoTrade. Don, so does Bitcoin's rally hinge on what the Fed decides tomorrow? What are you watching?
Yeah, of course. I mean, look, all financial markets are going to be a complete and utter free-for-all, especially during the Q&A portion, of course, of the FOMC announcement. It's our favorite. Jerome Powell hits the main stage, the Q&A starts, and markets are going to be absolutely wild tomorrow. There's no question about it. I think everybody agrees. You're looking for the 25 basis point hike. He has to move forward with that, but it's that Q&A that's going to get to fairly wild because. What are we? We're 10 days into where there was no banking crisis 10 days ago, and here we are in a bitter free-for-all, if you will.
So are you predicting 25 basis points? Before it was 25 to 50. Now it seems that our traders are thinking it'll be coming down because of this banking crisis that we have on our hands.
Yeah, no question. 25 basis point hike. I mean, look, inflation is still a really considerable concern at this point, but I think the Fed's hands are a little bit tied. This is not an easy situation, nor for Jerome Powell nor Janet Yellen. And at this point, they have to move forward because if they do nothing and they actually say, that's it, let's actually pause, we've done a little bit of damage, markets may in turn panic, which interestingly, ironically, as you were mentioning a moment ago, we may see a wild bullish move into Bitcoin if Jerome Powell's to actually hold rates rather flat.
All right. I'm looking at your notes, and we're seeing that you say the rally is happening for all the wrong reasons. Tell me what you mean by that.
Yeah, no, I've actually dubbed this the rally for all the wrong reasons. I mean, look, listen, if you're just trading crypto, you're thrilled, right? You're thrilled because price action is to the upside. But really, again, it's the rally for all the wrong reasons. We basically saw asset classes getting hammered that were, financials, energy sector getting decimated. And by the way, the energy sector getting decimated is usually recessionary. And all of a sudden, a flood of capital moving into the bond markets, moving into the crypto markets. Yeah, it's a rally for all the wrong reasons. So at this point in time, though, what I'm concerned about kind of moving forward is we also saw like a cyclical rotation in the S&P 500 into tech. Since when did stocks like Facebook and Microsoft, Meta, if you will, and Microsoft become, the cyclical rotation? Since when did that become the safety trade? Those are growth stocks. And the same type of rotation came into Bitcoin and crypto. It's pretty concerning because that correlation, it's still there. Okay. But as I said, it's this, rip your face off rally for all the wrong reasons. And, Bitcoin is really vulnerable at these price levels. Look, you don't have to look again too far. You can see the stall in the last couple of days as, the FDIC comes in and it's going to back all deposits. Of course, Bitcoin stalled out.
So we were just showing a chart of Bitcoin compared to equities, and it appears that this trading view chart shows that Bitcoin continues to move in lockstep with the ratio of Wall Street's tech-heavy NASDAQ composite index to the broader S&P 500 index. So is BTC just moving with equities, following greater macro trends?
Yeah, that's exactly why I call it the rally for all the wrong reasons. It's not moving so much with the S&P as it is specifically tech, and more appropriately, what I term the monsters of tech. I call the monsters of tech. It's a conglomerate. It's Apple. It's Amazon. It's Meta. Tesla. And as long as the rally actually is persistent in there, Google, you're going to see a rally persistent inside of Bitcoin. Nevertheless, again, at what point in time have we actually seen a rally into these wild growth stocks with real fear on the table? The one thing you have to be concerned about in a post kind of Fed announcement, which is going to be, portion of the day, Wednesday, Thursday, Friday, later this week. It's been a while since we've seen the S&P 500 correlations rather high. Effectively, what I'm saying is if the S&P 500 correlates, Bitcoin may start to effectively move with it once again, meaning like, for instance, you get 95 stocks down in the S&P 100, and all of a sudden Bitcoin's going to drop with it. Again, it's going to be a rough couple of days for volatility in the very near term here.
30 seconds, Don, but what are the support resistance lines you're watching for Bitcoin?
So obviously Bitcoin hitting the 30,000 mark would be absolutely huge. It would be huge because at that point, I'm proven wrong. To the downside though, I have to be honest with you, I'm still a bear. I've been a bear, and I'm looking to take bearish trades, in products like BITO, which is actually an ETF, because the liquidity happens to be there. I can put on put spreads to find my risk, but to the downside, look, breaking through and under 20,000 is ugly, but getting under 18,000 is a wild break, even down to 13,000. We're looking at, again, 50, 60% declines, and the possibility of it. We never formed a real definitive bottom prior to this most recent rally.
All right, Don. Thank you for your time. That was TheoTrade co-founder Don Kaufman.